Let us continue the discussion on the topic capital gain. Now, till now, what we have covered in capital gain? We have covered section 45, which is charging section. We have covered the meaning of capital asset. We have covered the meaning of transfer. We have covered those cases where there are some transactions which will not be treated as transfer as per the provisions of income under the Act capital gains. We have covered kinds of capital assets. To determine whether the asset is long term or short term, we need to have the knowledge of two things: type of capital asset, or you can say name of the capital asset plus holding period. Though I can easily check the holding period, but there are some special cases where I need to take the help of provisions of Income Tax Act related to determination of holding period. Like there are some cases when you haven't acquired the asset by making any payment, but because of the provisions of section 49 subsection 1, you got the asset by way of will, gift, etc. In such cases, you need to study the provisions how to determine the holding period of such assets. There are 6 to 7 different cases which I have discussed with you related to determination of holding period of these capital assets, those 6 or 7 capital assets. Then after this, I discussed with you kinds of capital gains. There can be long-term capital gain or there can be short-term capital gain. It depends upon the asset which you are selling. If you are selling short-term capital asset, the gain or loss is short-term. If you are selling long-term capital asset, the gain or loss is long-term. Then I discussed with you section 49, mode of computation. How do you compute this gain or loss? In short term, it is very simple. Sale, less expense on sale, less cost of acquisition, less cost of improvement. Difference if positive, gain, negative, loss. In long term, what we do? Sale, less expense on sale, less indexed cost of acquisition, less indexed cost of improvement. If positive, long-term gain. If negative, long-term loss. So what basically we need to compute the gain or loss figure? You need sale value, which is easy to determine. You need expense on sale, which is easy to determine. But you need two different items other than sale and expense, and those are cost of acquisition and cost of improvement. Once you determine cost of acquisition and cost of improvement, then if the gain or loss is long term, then you will do indexation of these costs. But whether it is long term or short term, cost is necessary to be computed first. You must know what is the cost of acquisition of this capital asset, and you must know what is the cost of improvement of this capital asset. Whether your gain or loss is long term or short term doesn't matter, but these two things are must for you to determine. So while determining the cost of acquisition and cost of improvement, first I told you in the last class, there are some special cases, just like holding period concept. There are some special cases while determining the holding period where you need to learn the concept. Same is the case here. Before you determine the cost of acquisition, there are some special cases where your actual cost is zero. Where your actual cost is zero. When you purchased it, you didn't pay anything. In those cases, you need to take the help of some provisions which will tell you how to determine the actual cost, and that is given in section 49 of the Income Tax Act. Section 49 of the Income Tax Act is relevant in those cases where you haven't paid anything. When you have paid something, then you have the actual cost. There is no problem. I will not read section 49 when you know what is your actual cost. Suppose I went to the market and purchased a car. I know the actual cost of car. I will not study section 49. But suppose I got this car free of cost from my friend. Then my actual cost is zero, and now I need to take the help of section 49 to determine what is the actual cost that will be deemed to be my actual cost. Though in reality my actual cost is zero. The section 49 will tell me that no, your actual cost will not be zero. What you have to be taken as, we will tell you, and that will become your deemed actual cost. So section 49 works for those cases where in reality your actual cost is zero. But section 49 will give me something as actual cost, and this is beneficial for me. Section 49 is beneficial for the assessee because your actual cost might be zero. But section 49 says that no, take this much value as your actual cost, so that you can deduct that actual cost from your sale value and your capital gain will be less, you will pay less tax. Had there been no section 49, my actual cost would have been zero and my capital gain would have been higher, as compared to this situation when I have something as actual cost and then if I compute my capital gain. Is this point clear, that section 49 is beneficial for the assesses? Because in those cases where actual cost is nil, section 49 tells me something or gives me some value which I can take as my actual cost. So section 49 is beneficial for the assesses. Is it clear? If yes, please raise your hands. Have you understood this point, that section 49 is helpful for the assesses? Because in those cases where actual cost is zero, 49 will at least allow you to take something as actual cost. So it reduces your capital gain and you will pay less tax. So section 49 is beneficial for the assessees. So from this, in this lecture, I will start the discussion from this section 49. So let me share with you the screen. So before starting this heading, let me again prepare a small flowchart for you so that you realize that how you will proceed in capital gain. First of all, how you proceed in capital gain, you must have the idea of this structure. First of all, you will check whether section 45 conditions are satisfied or not. If yes, then you will check whether it is my capital asset or not, whether it is transfer or not, and I have to make sure that this transaction is not covered under section 79, section 47. Transaction is not covered. This I have to make sure this transaction is not covered under section 47. Why? Because if this transaction is covered under section 47, it will not be treated as transfer, and if it is not treated as transfer, then there is no need for me to compute any income under the head capital gains. So when I am reading section 45, at the same time I am referring to these three headings precisely. Or you can say that section 45 requires the knowledge of these 3 points. This will be my first stage in solving the capital gain questions. That theoretically I must know the conditions of section 45. I must know the meaning of capital asset. I must know the meaning of transfer, and I must have carefully checked that this transaction is not covered under section 47, because had it been covered under 47, I would not have computed income under the capital gain. That's it. This is my first stage of capital gain. After this, now this was stage 1. First of all, I have to do this work. Then stage 2 starts. Then I need to check whether this asset is long-term capital asset or short-term capital asset. And on what basis I will check it? I must know the name of the asset, which I am referring as type of capital asset, plus the knowledge of holding period. Though I can easily determine holding period, but there are some special cases where you need to take the help of provisions of Income Tax Act. When you combine these two knowledge, then you will get another answer, stage 2, that now you know which asset is this, long term or short term. Then you will proceed further. Now you have to determine what? Long term gain or short term capital gain, or long term capital loss or short term capital loss, whatever is that. Now this is my next stage. Now what knowledge you need in determining this thing? You know the mode of calculation as per section 48. From sale you deduct expense less cost less improvement cost. If it is long term, you deduct indexed cost of acquisition or indexed cost of improvement. So you must know the mode of computation. Then what you need to know? Cost of acquisition. If you have purchased any capital asset, then actual cost of acquisition you know, but not the cost of acquisition. So I repeat, cost of acquisition, which I will use in computing capital gain, is different from my actual cost of acquisition. But to determine cost of acquisition, I must first know actual cost. If I have purchased something, when I have acquired something, I know the actual cost. It's easy because you know how much you paid. But there are so many cases in which you become the owner of the asset without paying anything. And the best example is all those cases of gift, will, inheritance, where you don't pay anything but you become the legal owner. So in those cases, when you have not acquired the assets, how do you compute actual cost? In those cases, I will compute actual cost as per section 49. When you have acquired something, you know the actual cost. When you have not acquired something but still you became the owner, then you need to take the help of section 49. It will tell you the actual cost. So once I am having actual cost with me, then I will proceed to another concept, how to determine cost. Cost of acquisition is determined as per section 55. This is my 55 section. How actual cost is determined? 2 points. If you have purchased something, you have the actual cost with you. No section is required. But if you have not purchased any assets, still you became the owner, then you need to determine actual cost as per section 49. Once you are having actual cost with you, then you will proceed further. You will apply now section 55 and you will compute cost of acquisition. So this is my next stage which I'll going to discuss with you now. That first I will tell you what is section 49. I will discuss those cases where you became the owner without purchasing the assets. Then when I will first complete, then when I will discuss this 49, and after completion of this discussion on 49, then I will move to section 45. Now I will tell you the cost which is necessary to compute capital gain. How do you determine the cost? Just like acquisition, you have cost of improvement. That is also your expense, cost of improvement. It is also derived as per section 55. It is also as per section 55. But there is nothing like section 49. That is not in improvement. It is very easy. Whatever is your actual cost of improvement, that's it. You simply take it. There is no such, unlike acquisition, there is nothing like those cases of improvement where some other person has improved for you. Such cases does not exist in improvement. Improvement is very simple. The person who has actually spent the amount on improvement, that cost is relevant, clear, that's it. Now these two things, cost of acquisition and cost of improvement, are required in short term. If it is long term, the same cost as per section 55 will be converted into indexed cost of acquisition. And similarly, the same cost of improvement as per section 55 will be converted into indexed cost of improvement. This is my stage 3 of capital gain. Then I will move forward to other stages. So this structure must be clear in your mind. First of all, section 45 to be satisfied, you must be sure that the asset which you are selling is a capital asset. The asset which you are selling is a transfer, and it is not covered. This transfer is not covered under section 47. If you are sure about this thing, then you will move to next point, that whether it is long term or short term. Then you will check the name of the asset plus holding period. If that is clear, then you will decide whether it is long term or short term. But you need the following three items. You must know the method of calculation. You must know the cost of acquisition of the asset. But in determining cost of acquisition of the asset, first of all, you must know the actual cost of acquisition of the asset. Similarly, you must know the cost of improvement. If it is long term, same cost of acquisition will be converted into indexed cost. That's it. Same cost of improvement will be converted into indexed cost of improvement. So this is what the flow chart which is going on in the topic capital gain. So now I am starting with, first of all, section 49. After 49 I will discuss with you section 55, and after 55 I will discuss with you index cost. So in today's class we will wind up calculation of long term or short term, whatever is the case. So today's discussion now is starting with this, how to determine the actual cost of capital asset with reference to certain modes of acquisition, section 49. This heading we will discuss now. It is not the cost. Remember, it is not the cost of section 55. While computing, I deduct the cost which I have derived as per section 55, not as per section 49. 49 is only helping hand for me in deriving the cost of section 55. How to determine the actual cost of acquisition of capital asset with reference to certain modes of acquisition. When I am writing this point, certain modes of acquisition, can you tell me what type of modes I am talking about? Can you think what type of modes I'm talking about? Certain modes of acquisition. What do I mean by these modes? Which modes are these? Where I became the owner without purchasing it. Where I became the owner of the capital asset without purchasing it. I haven't purchased it, still I became the owner. So in that case, in reality, if you forget about income tax act, your actual cost is zero. But under income tax act, you will be having something as actual cost, and that is a beneficial section for me. Now, let me discuss with you my first subheading of this. Which cases I will cover? The most logical case is 49.1, where the capital asset became the property of the assessee by way of gift, where the capital asset became the property of the assessee by way of circumstances mentioned in section 49(1). Circumstances, gift, will, inheritance. These three are the main words which are used when I talk about section 49(1). Otherwise, there are other circumstances also, but those might not be used at your level. For your level, gift, will, inheritance is more than sufficient. Where the capital asset became the property of the successor by way of circumstances mentioned in section 49(1). In these cases, you become the owner free by not making any payment. Still, there will be something as your actual cost. Now, logically, can you tell me, without I tell you the provision, let me tell you the same example which I discussed earlier. If you remember the example, this example, it is given in slide number 17, on slide 17. This example, do you remember this example? When I was discussing this heading, how to determine the holding period, I discussed with you an example. This example, where initial owner was Rahul, who sold the property to sold the property to Mr. K. Mr. K didn't sold it to A. Mr. K gave it as gift to Mr. A. Same property Mr. A transferred to Mr. B by way of will, and B finally sold it to Mr. C. So if you remember this example, please raise your hand. Do you remember this example? First, please raise your hands. Do you remember this example? Okay, so most of you remember this example. Now in this example, what was happening? In 1997, Rahul transferred the property. Rahul sold the property to Mr. K. In 2011, K gifted the property to Mr. A. In 2019, okay, Rahul transferred this property in 1997 to K. In 2011, K gifted the property to A. In 2019, A transferred this property by way of will to B, and in my year 2021, B sold the property to C. So one thing is sure in this case, that B is the assessee in the previous year 2020-21. So B is the assessee in 2020-21. Now if B will compute capital gain, first of all B will check the holding period, whether this asset is long term or short term. So in that case, we derived the holding period on the basis of the date when previous owner actually purchased it. So who was the previous owner in this case? K. K actually purchased it on 19th July 1997. So my holding period started from 19 July 97 till 25th March 21, and since this period is more than 24 months, I decided that this asset is a long-term asset. Now I'm moving to the next point. I need to compute capital gain or capital loss now. So I need the cost of acquisition, only then I will compute indexed cost of acquisition. And in fact, before computing cost of acquisition, I must be having actual cost with me. Can you tell me what is the actual cost to Mr. B? If you don't know the provisions of Income Tax Act, as Mr. B, what is your actual cost? Any answer? What is your actual cost? What is actual cost to B? If you don't know the provision of Income Tax Act, what will you say? What is your actual cost? As far as B is concerned, what is the actual cost of B? Any idea? Just think,
0.
what is to Mr. B? If you don't know the provision of Income Tax Act,
0.
0. Yes, because Mr. B got it free under a will on 7th December 2019. So technically, actual cost of Mr. B is 0. But I am doing or I am studying a legal subject where my section 49(1) says whenever there is any capital asset which you get because of the circumstances mentioned in section 49(1) and 49 mentioned the circumstances of gift, will, etc., then your actual cost is not 0 as an assessee. Whatever was the actual cost of the previous owner, that will be treated as your actual cost. So what was the actual cost of the previous owner in this case? What was the actual cost of the previous owner? 10,000. Previous owner Mr. K acquired it for 10,000. This will become the actual cost of Mr. B now. And that is why section 49 is beneficial for the assessees. Had there been no section 49, B would have taken the actual cost as 0. But 49 says that no, when we are going back to the previous owner to determine the holding period, to determine the actual cost also we should go to the previous owner, and whatever is the actual cost to the previous owner, the same cost will be treated as cost to the assessee. So in such situations, section 49(1) says that in such cases actual cost of capital asset to the assessee shall be deemed to be the actual cost, deemed to be the actual cost for which the previous owner of the property acquired it. So in that same example which I have discussed earlier, actual cost to the assessee, actual cost to Mr. B is nothing but actual cost to the previous owner, which is rupees 10,000. This is my first special case where I have become the owner of the asset by not purchasing it, but by acquiring it through other means, by way of gift, will, etc. And in this case, the section 49 says that the actual cost to you is the same actual cost for which the previous owner of the asset has acquired this capital asset. Please raise your hand if this is clear. So these all are very simple cases. So now I'm giving something for self-study now, because for your level, in 95% situations only this concept will come. But still, I will discuss 4 or 5 more special cases of section 49, where in reality your actual cost is 0, but because of section 49 you will be having something as actual cost. But I'm giving it for self-study. So let me tell you those points which you have to study on your own. Those are very easy. 9.2. Another special case where the capital asset became the property of the assessee in consideration of conversion of debentures into shares. Section 49 2A. Do not learn these sections. There is no need to remember these sections. I'm simply writing these sections for you so that if you want to read the act, you can directly go and read those sections. Now, what is this situation? For example, in 2011, I had debentures of R Limited, which I have purchased for 2 lakh rupees. In 2018, these debentures were converted into shares of R Limited. Suppose these were convertible debentures and company converted these into shares. So when these were converted, I haven't paid anything because I have 2 lakh investment in debentures. But in my year, previous year, 2020-21, what I am doing? I am selling what? I cannot sell the debentures because debentures does not exist. So I am selling shares. So when I am selling shares, I will compute long-term gain or short-term gain. So whatever I compute, I need to know the cost of acquisition. Now, technically, can you tell me what is the actual cost of acquisition of shares? If you don't know the provisions of the act, just as a layman, what is your actual cost of shares? What is the actual cost of acquisition of shares? Because you are selling shares, so you must know the actual cost of purchasing these shares. What is the actual cost of shares? Can you tell me? Nil. Actual cost technically of shares is nil because I have never purchased shares. But another logic is these shares you received because of the conversion of debentures. So whatever is the cost of debentures, that should be assumed as the cost of shares, and this is more logical. This is what section 49 2A says, that actual cost of acquisition of the capital asset to the assessee is equal to actual cost of debentures. That's it. So this section 49 is very simple. It only covers the logic because shares you have never purchased, but share is an outcome of debentures. So whatever is the cost of debentures, that will be taken as the actual cost of share. But this is actual, not the cost which you will deduct. For cost, I will tell you separately section 55. For the time being, we are discussing those cases where you don't purchase these shares, you got these because of other situations. Is this point clear? This is not a tough point, it is simple. Okay, now other 3 or 4 points I'm giving only for self-study. Those are easy and you must read it from the act. I have given the source. You must refer the act or whatever material you have with you. But self-study is also required for personal growth and for future growth. Next heading, where the capital asset, though even if you don't self-study, it's very simple as far as this section 49 is concerned, where the capital asset became the property of the assessee in consideration of conversion of preference shares of that company. Earlier debentures were converted into share, now preference shares are being converted. Conversion of preference shares of that company. You're not supposed to learn these sections. Section number, don't learn. 49 to AE. Now here also, logically what you will say, suppose my preference shares, for example, suppose preference shares are converted into equity shares. So when in future you will sell the equity share, logically what is the actual cost of equity share? Zero. But what you will say, that actual cost of acquisition of the converted capital asset to the SSC. If the assets converted are equity share, then what is the cost of this converted equity share to the SSC? Actual cost of preference shares. That's it. So I wanted to give it earlier for self-study, but I think you can learn it from here itself. These are not tough, it's very simple. And now the last point, 9.4, last. After this, we will move to section 45. Last point, where the capital asset became the property of the SSC. By converting the inventory into a capital asset. Into a capital asset. For example, till yesterday, I was doing a business of selling laptop. Till yesterday. So that was my stock till yesterday. I shut down that business and now those laptops have become capital asset for me. So when some person shuts down the business, entire stock by default gets converted into capital asset, because in future after shutting down the business, when those assets are sold, those are not being sold in the capacity as uh, inventory or as stock. They are now being sold as capital asset. So the moment you shut down the business and if any selling takes place, then that will be covered under the head capital gains. Till the business was going on, that selling was covered under the head PGB. So next, so situation arises, just because you converted your stock into capital asset, in future when you will sell the capital asset, the actual cost is what? The actual cost is what? Section 49. 9. So at least you do it self-study. Read from the website of tax department. I have shown that link. Read it, and then it's one line answer, but I want you to self-study this. Now with this, I have completed my 9th heading, how to determine the actual cost. And if you carefully see, only this 9.1 is relevant for your level. That's it. Whatever is the cost of previous owner becomes your cost. So technically section 49 for your level is not much in detail. It has only simple point. If you don't have the actual cost of the assets which are covered under section 49, then whatever is the cost of the previous owner, you take that previous owner's cost as your actual cost if you are covered under section 49 subsection 1. And in other three cases, in case of conversion of debenture into share, conversion of preference into equity share, whatever is the actual cost of debentures or the preference, you take that cost as your actual cost. And in conversion of stock into capital asset, that is for self study. It's only 1 or 2 lines, but I want you to at least have an idea how to read the act. So with this, I have completed my first topic of discussion, which is section 49, and now I will start with section 55, how to determine the cost of acquisition. While determining capital gain, I do not deduct actual cost, I deduct cost, only the cost, which is derived as per section 55. Till this point, whatever I have said, is it clear? If yes, please raise your hands. So let us start discussing with you section 55, but before that, let me show you the act so that you get an idea. that what we are going to be discussed. Let me show you the website of the tax department, section 45. Is still the screen visible? The screen where I'm writing, is that screen visible?
Yes, sir.
Next heading, section 10. I'll show you the website after some time. Let me write that heading. So let me write the heading on next page. I'm writing something, so I hope this screen is visible. How to determine, or you can say meaning of cost of acquisition. Now I will determine how this cost is to be computed, and section 55 subsection 2. In this entire section 55 subsection 2, I'll get the answer which helps me in computing the income under the head capital gains. How to determine cost of acquisition. Now let me show you the website of the tax department. Hope the website is visible. Let me go to directly section 55. You can see the heading of section 55. Meaning of cost of improvement, cost of acquisition, and adjusted. Ignore the word adjusted for the time being, as if you start reading 55, subsection 1 says, for the purposes of sections 48 and 49. What is section 48? Mode of computation. What is section 49? Where you need to compute actual cost. Actual. This actual will help me in determining the cost of section 55. Cost as per section 55. Do remember 49 only helps me in determining the cost which is required to compute capital gain as per section 55. I'm directly coming to the equation. This is 55 subsection 2 for the purposes of sections 48 and 49. Cost of acquisition. This is the word, if you remember. In section 48, I deduct cost of acquisition. I do not deduct actual cost of acquisition. I deduct cost of acquisition. Now, different capital assets are having different cost. So I will frame 8 categories for you. That is my way of presentation in my book. I have made 8 categories for you on the basis of this Act's language. Like section 55, subsection 2, clause A, it talks about the assets which is goodwill of a business, trademark, brand name, right to manufacture, produce, etc., etc. Tenancy rights, stage carriage, loom hours. So this is one category where the cost of acquisition is having its own way to be determined. Then it is another category, section 55, subsection 2, clause AA. It is which category? These are shares. As you can see, these are shares. All these shares are covered in this clause AA, whether these are original shares, bonus shares, right renouncement, right entitlement. whatever. So for shares, we have separate way to determine cost of acquisition. So it is my second category. Third category. Close AB, I'm skipping for the time being. That will become technical for you. So I'm moving forward. Close AC. Equity shares, units of an equity oriented fund or units of business trust as referred to in section 112A and which are acquired before 1st Feb 2018. This is my third category. Those long-term assets where the calculation of capital gain is special. Special, what do I mean by special? Especially we have a section 112A. This is the same section if you are reading the newspapers regularly. This is the same section which says that long-term capital gain till 1 lakh is tax-free and long-term capital gain over and above 1 lakh is taxed at a flat rate of 10%. This is through section 112A which we call or which we say. So all those long-term assets where capital gain will be computed especially as per section 112A if those long-term capital assets have been purchased by you before 1st Feb 2018, then the cost of acquisition method calculation method is different. This is my third category in my book, or what I will now refer after showing this act. When I move to my screen, I will frame it as a third category, separate category, because every category has its own way to determine cost of acquisition. Then this is residuary category technically. Then now earlier what was going on, section 55 subsection 2, what was going on, 55 subsection 2 clause A, then clause double A, then clause AC. So these are three categories. Now fourth category, 55 subsection 2 clause B subclause 1, clause B subclause 1, where you have acquired the assets before this baseline, base date, 1st day of April 2021. This is fourth category. Then fifth category, where you have acquired the assets and where previous owner comes into picture. It is having separate category, separate rules. Then whenever liquidation happens, if company goes into liquidation, in that case, how do you determine the cost of acquisition of the asset? Separate rule. Assets when these are divided or reconverted, subdivided, etc., etc. Separate rule. So I wanted to show you section 55. Let me now come to the screen where I will start writing this cost of acquisition. The purpose was to show you the act so that you know that whatever we are teaching, or whenever any person who is teaching income tax act or any act is teaching on the basis of the law, you have to read the act yourself to gain expertise. Now, how do you determine the cost of acquisition? This cost of acquisition is must for me to compute, because until and unless I determine the cost of acquisition, I cannot compute income under the capital gains. So now, for simplicity, I will proceed in my way. I have made two special categories of capital assets. This is my way of presentation. Or you can say two parts. I divide all the capital assets in two parts. This is my way of presentation. That's it. You can proceed as per your own way of learning this. In part 1, there are 5 categories of capital assets. Category 1, category 2, category 3, category 4 and category 5. In part 2, I have made 3 different categories of capital assets: category 6, category 7 and category 8. This is my view of presentation. I am calling these as residuary capital assets, and I'm calling these as special capital assets for which special rules exist. So why I need to know the cost of computation? I need to know it for the purpose of section broadly 48. Since in section 48 I need to compute the income under the head capital gains, I need to know this cost of acquisition for only this section. Until unless I know the cost of acquisition, I cannot compute income under the head capital gains. So how do you compute the cost of acquisition? For this, I framed 2 parts. I divided all the assets in India or anywhere which are covered under Income Tax Act in 2 parts. Within part 1, there are 5 special subcategories, and within part 2, there are only 3 residuary categories. So with category wise, now I will start telling you what should be the cost of acquisition of such capital assets. So category 1. Now it is nothing but same act which I have shown, I only simplified it. Or I only framed in such a way that it's easy to understand it. Category 1. Now which capital assets are covered in category 1? Capital assets covered in category 1 are. So for these assets, you have to apply this rule. Covered in category 1 are as follows. Now you should note down these assets. Goodwill of a business or profession. Whenever you are selling goodwill, suppose if Reliance Industries wants to sell its goodwill, they will apply this category to determine their income under the head capital gain. Because by determining the income under the head capital gain, their cost of acquisition is totally dependent on this category, section 55, subsection 2. Clause A, it is but precisely 55 2A. 55 subsection 2 clause A, goodwill of a business or profession. B, trademark. Public brand name. For these assets, we have special rules. Brand name associated with a business or profession. Right to manufacture. Suppose I have a legal right to manufacture any particular product. Right to manufacture. Produce or process any article, public thing. D point, right to carry on any business. E point, tenancy rights. Stage carriage permits. And loom hours. Loom hours are basically in textile industries. Now, if I am the seller of these assets, then one thing is sure that I will compute the income, because everything in this world is a capital asset except some items, like anything which is my stock, personal belonging except jewelry, agricultural land in Indian, all these are not covered in that exception. So by default, these are capital assets. So when you sell these, you have to compute income under the capital gain. Whether it will be long term, short term does not matter. You need the cost. What is the cost? So what is the cost of these assets? It depends on three different permutation combinations. So these are the name of the assets which are covered in category 1. And how do you determine the cost? It depends on how you quote these assets. It depends on this table. How you acquired the above assets? What was your way? How the above capital assets have been acquired? By the assessing. How you have acquired it? This is the main question. And on this basis, cost of acquisition to the assessee will be given, will be determined. So first way, you purchased it. It's very simple. I purchased it. How you acquired those? Suppose I paid the amount and then purchased it. So it's very simple. There is no problem in that case. When you purchased it, by way of purchase, you purchased. Then what is the cost of acquisition? It is equal to the purchase price. So directly you will deduct this purchase price. Suppose I purchased goodwill of another business for 50 lakh rupees. So what is my cost of this goodwill which I have purchased? 50 lakh rupees. It's very simple. Suppose you haven't purchased it, where such capital assets became the property of the assessee because of circumstances mentioned in section 49(1). Suppose my friend has gifted a goodwill of that business which he has purchased long ago. Suppose Mr. A is my friend. For 1 crore rupees, he has purchased goodwill of X Limited. For example, he has purchased goodwill of or any sole proprietor. Suppose he had purchased the goodwill of any sole proprietorship business. Or let me assume goodwill of A Limited. He has purchased the goodwill of A Limited. Rather than Mr. A, let me make it as a company for better understanding. B Limited purchased a goodwill of A Limited for 1 crore. B Limited transferred this goodwill to C Limited under the scheme of amalgamation. And suppose amalgamation is also covered under section 49(1). For your level, I have told you gift, will, inheritance. In reality, 49 subsection 1 covers many things. Amalgamation is also one of the things. C Limited now sold this goodwill so assessee is whom? C Limited. Assessee is C Limited. He sold the goodwill for 5 crore rupees. So when he will compute cost of acquisition, what is his cost of acquisition? Since C Limited has not purchased it, he got it free because of circumstances mentioned in 49(1) from B Limited. In this case, what is the cost to C? Can you tell me what is the cost to C Limited logically? Actual cost. For which? Can you complete the line? Actual cost for which? The previous owner acquired it. So he will write that C Limited will use this category 1 concept, and he will say that though my actual cost is nil, but since I became the owner of this goodwill because of the circumstances mentioned in section 49.1, so whatever was the actual cost of the previous owner, that will become my cost. So whatever was the actual cost to B Limited, who was the previous owner, for C Limited, this 1 crore becomes the cost of acquisition. That's it. This is what the second point. And third point, when you have neither purchased it nor you became the owner because of any previous owner, so in all other cases, then your cost is nil. Because when all these cases, in all these cases, when you have neither purchased these nor you became the owner because of previous owner, then how, from where you got these? Then there are high chances that these are self-generated. These become self-generated. When Reliance started its empire around 40 to 50 years ago, what was the goodwill of Reliance Industries? Nil. But in these past 30, 40 or 50 years, now this goodwill has been generated on its own. A doctor when opens a clinic today, what is the goodwill of that doctor? Might be nil. But after 30 years, might be the doctor will be having his own goodwill. So out of these assets, there are some assets which can be self-generated, which have been generated on their own on the basis of time, experience, etc. So technically their cost is zero. These are also known as then self-generated assets. When you have not acquired these assets, so your cost is what? When you are not, when you have become the owner of these assets because of the situations mentioned in section 49.1, then also something will be your cost. But when you have neither purchased it nor you became the owner because of 49.1, then what is your cost? Zero, nil. So in such cases, when you transfer, these three situations will help you in determining the actual cost. Purchase on this on last point. So whenever you are selling these seven, you have to learn those names. And whenever you get a question where these things are sold, you must come directly to this section 59 subsection 2 clause A. It will help you in determining the cost of these assets which you are selling. Please raise your hands if this first category is clear in your mind. Income tax is very easy, provided you know it conceptually. Just because you have to solve the numericals, then you might solve the numerical for your level only, but at some senior level, you will never be able to solve the numericals if you know the sequence of attempting the numerical. That first I should meet these conditions, second stage I should fulfill these conditions, and third stage I should fulfill these conditions. Only then you can understand it. So this is category number 1. Category number 2 now. Category 2. Category 2 covers shares. Which shares? Bonus shares, right shares, renouncement of right, and right shares purchased by the person, any other person to whom Right has been renounced. In these cases, now this is section 55, subsection 2, clause double A. You are not supposed to learn these sections and clauses, but I'm writing this so that if you want to refer the act, you can refer these sections from there, and you can see the language which is used in the act. So let me prepare a small table. You have to learn these provisions. Only then you will be able to attempt the numericals on capital gain. So here the name of the asset, that means type of the asset. And what is the cost of acquisition? So let me write all types of shares, because all these bonus, right, these must have been received on the basis of some shares which I am already having with me. So there must be some original shares with me. Only then I will get bonus. Only then I will get right. So some original shares. Because of these original shares, I am getting some bonus or right. So what is the cost of acquisition of these original shares? It is simple. Amount actually paid in acquiring these shares. I will discuss an example of this question. So first let me write down the theory. Suppose 10 years ago I purchased some shares and now I'm selling those shares. So whatever amount I paid in purchasing those shares at that time, that becomes the cost of these original shares. Bonus shares. Bonus shares are those which I got free. So what is the cost of these shares? Nil. Technically you get bonus free of cost. So what is the cost of acquisition of these bonus shares? Nil. Right shares. What is the cost of right shares? Right share means you can purchase the shares directly from the company at some less price. So whatever amount you actually pay to the company, that becomes your cost. So same point, just like original shares, amount actually paid in acquiring these right shares. Right renouncement. As I told you in the earlier lecture also, when I get an offer to get right share, I can purchase it or I can sell this right to other party. So when I am selling this right to other party, I will get some amount from other party. That is also my gain. But what is the cost of acquisition of this right? Nil. This right doesn't come to you for with any cost. It has been given by the company. That's it. So when you are selling right renouncement, then your cost is nil. And the person to whom I have sold this renouncement, what is the cost for that person? So last point is right. Shares purchased by any person to whom Right has been renounced. By another person. So I'm leaving this column blank. I will write this later on. Let me, and some note I will write later on. And for this note, you can leave around 4 to 5 lines. And let me first discuss with you an illustration. For category 2, let me discuss an illustration. So from page 7.17 book. Let me discuss a small illustration which will help you in determining the cost of category 2 capital assets. Think logically. Don't learn any subject just to get 100 marks in that subject. These marks are of no use after some time. Knowledge matters, not the marks. Mr. K had purchased 1000 shares of R Limited. This is the question which I am reading. Just remember. Mr. K had purchased 1000 shares of R Limited, a listed company, on 18th December 7. Oh, so this is an example. 1000 shares I have. 1000 shares I purchased of R Limited on 18th December 2007 for rupees 12 lakh. I'm not writing this amount 12 for rupees 12,000. I'm not writing this amount. This is the date of purchase. On 21st June, R Limited allotted 50 bonus shares. On this basis, I got 50 shares of R Limited on 21st June 2019, and I got these as bonus free. On which basis? On the basis of these original shares. Had there been no 1000 shares with me, I would not have received any bonus. On 20th March 20. So what happened? On this basis, I can say on 20th March 20, this is what the illustration is. So I'm discussing an illustration from my book. On 20th March 20, what is my position? I have total 1050 shares. 1050 shares of R Limited I have. That's it. It's an information only that on this date, it was 2009, it was 7, and 2020, I had 1050 shares. R Limited offered 100 shares to me at a price of 60 per share on the same date. On this same date, I got an offer from my company to purchase 100 shares. At what rate? 60 rupees. What I did. On 22nd March, I accepted the offer of 70 shares. So, within 2 days, I gave my consent to the company that I want to purchase out of 100, I want to purchase 70 shares. I accepted the offer of 70 shares on 22 March 20, and on the same date, for 30 shares, I transferred or I renounced the right in favor of my friend Mr. M. but that friendship was of only 150 rupees. So I, to my friend, or from my friend, I said that give me 150 rupees and you can purchase 30 shares at 60 rupees from the R Limited. But I received, or I earned 150 rupees. And who am I? Mr. K. I am Mr. K, and now I transferred this right to Mr. M, but only for 30 shares and after receiving 150 rupees. On 28th March, what happened? On 28th March, what happened? R Limited allotted, so I got the allotment. 70 shares to whom? To Mr. K, and 30 shares to Mr. M. Different stages are going on. You can see this question. These are not tough questions. These are conceptual questions which will make you conceptually strong. On different states, different dates, different things are happening. 26th March 21. So that was stage 1, stage 2, stage 3, stage 4, stage 5. What happened in stage 6? What happened in stage 6? 6. 26th March 21. Dates are necessary. Okay. So this is how we are moving. Different stages, date wise. On 26th March 2021, what is happening? Mr. K transferred 1120 shares. Sold. On 26th March, Mr. K sold 1120 shares. And on 30th March 21, Mr. M sold 30 shares. That's it. This is what the illustration is. So when I'm saying that K sold 120 shares, can you tell me what do you mean by 120? Out of this 120, sorry, not 100, 1120, 1000 original, 50 bonus, 70 right. This is one sale. For Mr. M, 30 shares. These are white. These are which shares? Right shares. These are right for me, but for Mr. M, these were original shares. So right oblique original, it depends for whom you are talking. This 30 might be right for me, but for Mr. M, these were original shares. Because he directly didn't get the offer of right. He got this offer from Mr. K. When Mr. K renounced his own right in favor of Mr. M. And one sale was taking place on 22nd March 20, when 150 was earned. Is the question clear? Technically, it is sale 1, it is sale 2, it is sale 3, because all different sales can be having different cost of acquisition. It is sale 4 and it is sale 5. 5 different sales are taking place, and these 5 different categories can be having different cost of acquisition. Is the question clear? If yes, please raise your hands. Be slow, but be confident in each and every concept. We are not in a hurry to do the topics. So concept must be strong before we proceed. Now when sale is taking place, I need to compute capital gain. So the question which will arise in my mind, first question, what is the cost? Can you now help me in determining the cost? Can you tell me what is the cost of this renouncement of right S1? What is the cost of this renouncement of right? When I will earn 150 rupees, how much cost I will deduct? What is the cost of renouncement of right? Can you
Nil.
tell me? What is the cost?
Nil.
Nil. Because of section 55, subsection 2, clause AA, right renouncement nil. So entire 150 rupees will be taxable. What is the cost of these 1000 original shares? What is the cost of 1000 original shares? Can you tell me?
So 12,000.
12,000. If you remember, these shares were purchased for rupees 12,000. Do I haven't written those? But what is the cost? Of course, actual price. This is the answer. Amount actually paid in acquiring these shares, original shares. So what you actually paid? 12,000. This is the cost of this S2. What is the cost of 50 bonus shares? Can you tell me what is the cost of 50 bonus shares? Because sale is not free. I will get some amount. But my cost is what for these bonus shares? Nil. So
Nil.
bonus shares, section 55, subsection 2, clause AA says bonus, cost of acquisition of bonus is nil. What is the sale of these 70 right shares which I have sold as Mr. K? What is the cost?
The amount actually paid for the right.
Hmm? 4,200 rupees. 70 shares into 60 rupees. Right? The amount which you are paying to the company to get that right, that is your cost. And for these 30 shares, it is not right for me. It is right for Mr. K, but in the eyes of Mr. M, it is the original share. It is right for Mr. K, but in the eyes of Mr. M, it is the original share. What is the cost of this? Can you tell me logically? What is the cost of these 300 shares?
1950.
Not 330 shares. What is the cost of 30 shares?
In 1950.
1950. How?
So he paid 30 per share to 60 per share for to R Limited and 150 to Mr. K.
Yes, this is the cost. This point I haven't written. I haven't written earlier. Right shares purchased by any person. So in my example, who is this any person? This any person in my example is Mr. M. And who transferred this right? Mr. K. So what is the cost in this case? The cost is equal to amount of purchase price paid by him to the person who is renouncing this right. To the person renouncing such right plus amount paid by him to the company giving this right. Giving this right. This is what my category 2 is. And one note which I will explain to you later on, while determining the cost of acquisition of capital assets covered in category 2 the concepts of category 6 and 7 are also to be applied, but that I will discuss later on. Category 6 and 7 are also to be applied. That when you are determining the cost of acquisition of category 2 capital assets, this table is not the final answer. This is the answer which is incomplete. You must not forget to apply the provisions of these two categories. So since I am not discussing these two categories right now, so I have simply written a note. I will tell you this later on when I will come back to this category 6 and category number 7. Same example, then I will show you how the final answer could have been computed. So you must remember that when you compute the cost of acquisition of category 1, that is the final answer. But when you compute the cost of acquisition of category 2 assets, this table is not the final answer. It has given you something, but still that is not the final answer. You must apply category 6 and 7 provisions also here. Then only you will get the final answer. So this note is pending for the time being. Now, these all are special categories going on. All these are special categories, not tough, but practice is must. Category 3. It covers, like category 1 was covering some goodwill, trademarks, category 2 was covering shares, category 3 is covering some special assets. Which are those? Where the long-term capital assets covered under section 112A have been acquired before 1st Feb 2018, section 55 to close AC. This I will discuss when I will cover with you section 112A. So I'm keeping it for the time being pending. We will discuss when I will cover section 112A. But you must remember that there is a category where only long term, not short term, where only long term capital assets are covered, and only which capital assets which are covered under 112A. Further, those which are covered under 112A, if these are acquired before this date, only then I will use category 3. If the assets which are covered under 112A and if these are purchased after on or after 1st Feb 18, I will not use category 3. To read category 3, three conditions must be there. Assets must be covered under which section? 112A. Assets must be acquired before 1 Feb 2018. Assets must be long term. In 112A, there might be some assets which have been acquired on or after 1st Feb 18. For those assets, I will not use this category. For those assets, I will not use this category. So just because some assets are covered under 112A, I should not run to apply category 3. I must not forget that. At the same time, when the assets are covered under 112A, at the same time, those must be acquired before 1st Feb 2018, only then I will look the answer of cost of acquisition in category 3. So I am keeping this category for the time being pending. Is it clear? Is the discussion on these three categories for the time being, is it clear? If yes, please raise your hand. Category 1, the entire game in capital gain is to compute cost of acquisition. Category 1, trademark, brand name, etc. Category 2, shares related, and category 3, only those assets which are covered under 112, and that too if these have been acquired before 1st Feb 2018, which I am keeping for the time being pending. Category 4 now. Category 4. When company liquidates, and at that time when company liquidates, company distribute the assets. As a shareholder, when company liquidates, you might get some cash, you might get some plant, you might get some building, etc., etc. You get the assets which can be cash or in kind. How do you determine the cost of acquisition of those assets which you have received when your company went into liquidation as a shareholder? So category 4 is where the capital assets became the property of the assessee, became the property of the assessee on the distribution of capital assets on the distribution of capital assets of a company on its liquidation. It is section 55 to B subclause 3. I'm not discussing that, but you must know that this is a category. Whenever company liquidates and give you assets when it is liquidating, because company is not having sufficient money, so whatever they have, they will distribute to the shareholders. So at that time, how do you determine the cost of acquisition of these assets? I'm leaving it. For your level, you can skip this, not relevant for our course. Though it is only in one line, but I don't want to discuss it for the time being. I have given this section. If you want to read it, you can read it. Otherwise, this is not relevant. But you must know that there is some category. Because category is necessary for you to learn. You must be having the idea of this category in your mind, but you are not supposed to learn. How do you determine the cost of acquisition in this situation? So category 4 is only for the namesake. You are not supposed to remember it. Leave it. Similarly, category 5 is also for namesake. You are not supposed to remember it, but you must know that there is a category. So category 5 is where the capital asset being shares became the property of the assessee by way of subdivision of shares. Etc. etc. Section 55 subsection 2 clause B subclause 5. Again, leave it, not relevant for you, but you must remember that there is a category. For this we have separate way to determine cost of acquisition, because in total I have made 8 categories, and these are the maximum 8 categories which are written in the Income Tax Act. So at least you must know that entire section 52 55, entire section 55 for the purpose of computing capital gain can be divided in these 8 categories. Category 1 is relevant for you, which constitutes goodwill, trademark, etc. Category 2 is relevant for you having shares. Category 3 is relevant for you having those long-term assets which are covered under section 112A and have been acquired before 1st Feb 2018. Category 4 and 5 you must know by name only, but you are not supposed to remember how to determine the cost of acquisition of category 4 and 5, and that is why I am not discussing it. After this, category 6. So with category 5, we have covered part 1. And if you see carefully, in this part, no category 5 you are supposed to do, no category 4 you are supposed to do. Category 1, 2 and 3 are must for you to be studied. Category 3 I will teach you later on. For the time being, you know only category 1 and 2. Is this discussion clear till this point? If yes, please raise your hand. Have you understood what I have just said? If yes, please raise your hands. Okay. Now I am coming to category number 6, 7 and 8. With this, I will wind up the topic of cost of acquisition today. Category 6, 7 and 8. So this category 6 is nothing but covered under part 2, which is a residuary case. But before discussing category 6, just like in category 2, I have written this note. While determining the cost of acquisition of capital assets covered in category 2, concepts of category 6 and 7 are also to be applied. Same note will be used in category 3 also. So you must remember this, that while determining the cost of acquisition of capital assets covered in category 3, the concepts of category 6 and 7 are also to be applied. Since I have not discussed category 3, so this note is not relevant for you till we discuss category 3 later on. Now category 6, now these are easy categories. It says where the capital assets have been acquired before 1st April 2001, because 1st April 2001 is the base date where the capital assets became the property of the assessee. Before 1st April 2001. In these cases, now this category is most relevant, one of the most relevant category. It will be used in almost every question. It might be used in almost every question at your level also. Whenever you become the owner of any asset which you have acquired before 1st April or you became the owner before 1st April 2001, in that case, what is the cost of acquisition? In that case, so the name of asset is not there. It can be any asset, which is for which you became, which you acquired before 1st April 2001. Cost of acquisition COA is equal to actual cost of acquisition of the capital asset to the assessee, of the capital asset to the assessee, or now can you see carefully why I was saying that actual cost of acquisition is not to be deducted? Why I told you that while determining capital gain we deduct cost, we do not deduct actual cost, because in some cases might be actual cost is not the answer of cost of acquisition. This is that example that your cost is equal to actual cost or fair market value of this asset, FMV. Of this capital asset on 1st April 2021. Whichever you want to take, you can take, it is your choice. So it depends on choice of the assessee. It depends on choice of the assessee. Income tax act says it's your choice. If you want to take the cost as actual cost, you can take that cost, actual cost as cost. Or if you want to take fair market value of this asset on 1st April 2000 as your cost, you are free to take any decision. Now, can you tell me logically which I should take as an assessee, as a rational person? I should take actual cost or FMV? On what basis it should depend? Can you tell me logically?
Which one?
Yes, your voice has not come.
So which one is lower?
Lower. Why?
Well, whichever is higher, I guess.
Higher. Lower
High.
means you want to pay high tax. Is the point clear or not?
Yes, sir.
Higher, because high will be the cost, less will be the income. So you pay less tax. So in some of the books, you will find that cost of acquisition will be actual cost or FMV, whichever is higher. But in reality, you must know that whichever is higher is not the compulsion. It is the choice of the assessee to take any cost. If assessee is willing to take the lower cost as cost, that is also fine. But logically, you must not forget that. So I'm writing it as note. It is always better to take higher cost as the cost of acquisition. It is always better. But that is not compulsory. It is always better to take higher of the above two values, higher of the above two values as cost of acquisition. That's it. So it's very simple category. Whenever any capital asset has been acquired before 1st April 2001, higher of these two is the should be taken as the cost of acquisition. Please raise your hand if category 6 is also clear. Next point, category 7. It is also very easy and logical. Category 7. Where the capital asset became the property of the assessor because of that section 49.1. 49.1 is the relevant section. 49.1 is the that section where you haven't actually purchased the asset. You become the owner by way of will, gift, inheritance, etc. In this situation, what happens? Where The capital asset became the property of the assessee by any of the modes mentioned in section 49(1). If you became the owner of the property because of the circumstances mentioned in 49(1) and the capital asset became the property of the previous owner, because whenever you have section 49(1), there will be a concept of previous owner, and the capital asset became the property of the previous owner before 1st April 2001. In this case, what is the cost of acquisition? Now, for this, before I discuss this, let me go to the same example. Yes, this is that example. Remember this example which I discussed just at the beginning of today's lecture as well as earlier. How to determine the holding period. This same example where Rahul transferred the property in 1997 to Mr. K for 10,000. Mr. K in 2011 transferred it to Mr. A by way of gift. Mr. A in 2019 transferred it to Mr. B by way of will. B finally transferred it to C. This is the best example where you have the applicability of section 49(1) at 3 different points of time. Do you remember those 3 different points of time? This is the best example of section 49(1), where first of all I discussed in the same example how to determine holding period. Then in today's lecture I discussed how to determine what? Do you remember what I discussed? How to determine what? Actual cost of acquisition. Actual cost of acquisition. To the assessee. This I have discussed today. And now I will discuss in the same example what is the cost of acquisition to the assessee. In the single example, whenever you have previous owner concept, always 3 technical issue arises. How to determine the holding period? What is the actual cost of acquisition of the asset? And what is the cost of acquisition of the asset? Now, can you think logically? Can you tell me logically what should be the cost of acquisition? This is the example which I am applying in category number 7, where assessee became the owner of the asset because of circumstances mentioned in 49(1). Yes. B became the owner because of circumstances mentioned in 49(1). But previous owner became the owner before 1st April 2001. Previous owner is Mr. K, who became the owner before 1st April 2001. He became the owner in 1997. This is what my category 7 is. Can you think logically and determine the answer yourself? Suppose you don't know the act, what logically you would have decided? What should be the cost of acquisition to the assessee? Do you remember I have already derived actual cost of acquisition? Do you remember in this example what is my actual cost of acquisition? What is my actual cost of acquisition in this example, if you remember? It is the actual cost of the previous owner. So actual cost of previous owner is 10,000. This is the actual cost of previous owner to previous owner, PO. This I have already computed. Logically, can you tell me what is the cost of acquisition to the SSC? Can you think logically? Though it might be a little bit difficult to think because we have been discussing this topic for the past 1.5 hours, so it might be a little bit difficult for you to think, but still, can you make an attempt? Answer you can derive through category 6. In category 6, what was the answer? Whenever the capital asset has been acquired by the SSC before 1st April 2001, what is the answer? Actual cost of acquisition or FMV on 1st April 2001 as per the discretion. Same is the answer here. Same is the answer here. But I will make only one change. And the change is and the change is what? The change is cost of acquisition is actual cost of acquisition of the capital asset to the assessee. Rather than assessee, I will use which word? Previous owner. Otherwise, everything is same. To the previous owner or fair market value of the capital asset on 1st April 2001. Here also depends upon the choice of the assessee, but the logical way is note what is the better way? Better to take higher values the cost. Is the point clear? Otherwise 6 and 7 are exactly same. I simply segregated it, or in fact Act has segregated it so that confusion is removed. Whenever any asset has been acquired before 1st April 2001, there is a need to compare that actual cost with the fair market value always. These are the 7 categories. So in my example, the actual cost of capital asset to the previous owner was 10,000 in that example, and FMV was not given. When it was given, you can decide accordingly. So whenever you have previous owner concept, always remember, whenever you have applicability of section 49(1), whenever you need to think in 3 different directions. Whenever you have section 49(1), that means whenever you get any asset by way of gift, will, inheritance. In such cases, you determine holding period separately. To determine holding period, you always go back to the previous owner. You always go back to the previous owner. Similarly, when you determine actual cost of acquisition to the assessee, you always go back to the previous owner. Similarly, when you determine cost of acquisition to the assessee, here also you always go back to the previous owner. And in the next stage, when I will show you indexed cost of acquisition to the assessee, there also I will show you that you had to go or you will have to go to the previous owner, though that I have not yet discussed, but I will show you the same thing. So whenever you have applicability of 49.1, these four things are must to compute. You go back to the previous owner for holding period, you go back to the previous owner for actual cost, you go back to the previous owner for cost, and you go back to the previous owner for indexed cost. These three I have already shown. I have shown that for holding period you are going to the previous owner. For actual cost you are going to the previous owner. For cost you are going to the previous owner. How I have shown this to you? That to determine cost you are going to the previous owner. Similarly, in today's lecture I was discussing this point. Whenever you get ownership because of 49.1, to determine actual cost you are going to the previous owner. You can see here you are going to the previous owner while determining the actual cost to you. And earlier also I have shown this when I was deriving holding period. This was the holding period 19 July 1997. There also I have gone to the previous owner. This is my seventh category. Please raise your hand if these 7 categories are clear. And now the last category I will discuss, but please raise your hands if you think that you are in a position to revise it and you will understand these remaining seven categories. Next point now, category number 8. And with this, the topic of cost of acquisition is over. After this, we will start cost of improvement, and then we will start indexed cost of acquisition and indexed cost of improvement. But let us first wind up cost of acquisition. And the last category, category 8. Where the capital assets became the property of the assessee on or after 1st April 2001. So it's very simple. Whenever the asset has been acquired or it became the property of the assessee on or after 1st April 1, the cost of acquisition is simple. Actual cost of acquisition to the assessee. Actual cost of acquisition to the assessee. Okay, but this category covers those assets which are not covered in above 7 categories. Those capital assets are covered which are not covered in above 7 categories, because all these category 1, 2, 3, 4, 5, 6, 7, 8 all are having its own identity. For category 1 is having category 1 own identity, category 2 own identity, but in category 2 I need to apply category 6 and 7 rules also. Category 3 own identity, but I need to apply category 6 and 7 rules also. Category 4 and 5 own identity, not in our course, so you skip it. Category 6 separate, category 7 separate, and in category 8 when you apply, then make sure that when you apply category number 8, this is that asset which is not at all covered in above 7 categories. Then you apply it. Simple. Actual cost, that becomes the cost. So today what we have discussed only 2 concepts. So today's discussion was, we discussed section 49 and we discussed 55 but not complete. In this only cost of acquisition. Still, what is pending is 55 cost of improvement. What is pending in is not section 55. I'm not writing the section. What is pending is indexed cost of acquisition, and what is pending is indexed cost of improvement. After this discussion, almost my 40% chapter will be over when I will end up indexed cost of acquisition. So do remember this flow chart again. You must be having picture of this flow chart in your mind. Whenever you solve any numerical of capital gain, you read these things. Section 45, capital asset, transfer, transaction not covered under 47. Then you check type of capital asset and holding period. Then you check mode of calculation. And for the time being, I have discussed actual cost and cost of acquisition. I will discuss in the next class cost of improvement. I'll discuss in the next class indexed cost of improvement, and I will discuss in the next class indexed cost of acquisition and improvement. These three are pending. That's all for today's lecture. In case you have any doubt, you can ask. Otherwise, please read or listen to all the previous videos of capital gain which I have discussed. Though tomorrow on Sunday I want you to have the extra class, but now I think you need 1 day break. So till tomorrow or by tomorrow, you must carefully listen to all these lectures of capital, and you would be able to understand the lecture of Monday's class, because on Monday I will discuss cost of improvement, indexed cost of acquisition, and indexed cost of improvement. And if time permits, I will discuss some other concepts also in capital gain. So, if possible, carefully listen to all the previous lectures of capital gain, and by tomorrow you must wind up. You must not be having any doubt in any topic within the chapter of capital gain, the topic which I have discussed with you. Any doubt, you will ask me day after tomorrow, or if you want to stay after this lecture, you can stay here. So that's all for today's lecture. Goodbye.